Hello, my name is Alan Lynch and I'm the Head of Education for LearnSignal. Today I'm going to take you through Perkins Company, and Perkins Company is March-June 2018 question, and I'm going to take you through it using the ACCA CBE format, so to try and put you in the position of what it'll be like in the day of your exams. So this walkthrough will not only include some technical knowledge about how to complete the question for Perkins, we'll also go through little hints and tips about how to show your work as best as possible in order to maximize your marks on exam day. So the first thing I would ask you to do is to have a look at Perkins' question. Please read it in great detail before we continue. If you haven't read the question, press pause now, read through the question and the requirements, like in an exam, highlighting areas that you think might be important. It's good to have a good background of the question first. So now we look at the requirements, and in the requirements is A, B, C and D. So we have to calculate a gain on disposal, we have to remove the results of Swanson, we have to calculate the equivalent ratios, and we have to use the ratios in Part C to provide some commentary. So your gain on disposal first of all in Part A. Again, formatting is useful here, so write your gain on disposal. Have a look at the question. Okay, so let's give yourself some room in the column straight away in order to do some work. We know we're going to be calculating amounts here, so let's put that at the top. So let's put the dollars at the top, justify to the right hand side. Again, layout is very, very important for this. So your gain on disposal, first of all, we look at your proceeds number, and your proceeds number comes directly from your question. So the proceeds number of 28640. Again, the 28640, have a look at the tools that you have in your CBE format. You can make them look so much better, and formatting down with the column. We know we're going to be doing quite a lot of calculations here, so why not just highlight a number of cells and change it to a similar format. It just means that any numbers you type in will have a nicely formatted look to them, and it'll be much easier for an examiner to follow you through. So then we have to take away your goodwill number, and the goodwill number, we know we always have to do a little bit of working on goodwill, so let's move down the page and do that working for goodwill. So working number 1 on goodwill, what do we have to take into account? Well, first of all, let's highlight this, that it is a separate working, and we look at the consideration. And the consideration is for acquiring 80% of Swanson. And that consideration from your question is 19.2 million. Again, a lot of the information for this question is provided to you with very little calculations. What you need to do is you need to spend some time identifying it and using it properly. Then we look at the NCI at acquisition, which is a non-controlling interest, and that's 4.9 million, again from the question. And then finally you have to remove the net assets at acquisition of Swanson, and those net assets of acquisition of Swanson were 19.8 million. So now, what's your goodwill number? Well, we have to add all these up. Again, use your formulas, so equals and use your plus like I'm doing there. Much easier way, because if you make mistakes later on or notice a mistake and change those numbers, everything will be updated. Again, use the equal and feed in your answer. Again, it's really important, because if those numbers change, it'll be really useful to be able to update your numbers, and all your formulas and answers will flow through all the way through parts A to D. So then we less your net assets at disposal, which were 26.1 million, and we have to add your NCI at disposal. Again, NCI requires an additional calculation, so we'll make that working too. The beauty about the CBE questions is that we've already done a calculation, so why not just bring that down and just adjust it? It's already nicely laid out with a formula in there already, so we'll make that working too, and we'll make that your NCI at disposal. So to calculate your NCI at disposal, first of all, we'll clear that off, and we'll look at your NCI at acquisition. And the NCI is acquisition is again directly from the question, and that's 4.9 million. Then we have to take the NCI percentage regarding the post-acquisition, and we have to look at what was remaining afterwards in the company. So the remaining amount is 20%, and we have to take the current Swanson net assets, and we have to take those net assets at acquisition out. So it's the NCI percentage multiplied by Swanson's net assets. So what's important here is to look at in here, so in your calculation, so we start off with the 20%, which we already know, and we multiply that by the difference between the current net assets of Swanson and the net assets of acquisition, which are 26.1 million and 19.8 million, and we've already used a lot of these answers. So we're going to bring that up to the calculation above. You just double check here. So the less goodwill, the way we're going to use the total formula, we'll change that to a negative. We'll feed in adding back your 6.16 million for your NCI disposal. And again, using your formula to tot all these up. So to 4.4 million, no harm bolding that to make sure the examiner and putting a little heading on your gain on disposal. And that's part A completed, and that's 5 marks. So a quick 5 marks there, roughly about 8 to 9 minutes, and moving on to part B. Now again, you've already done a lot of the work, so copy down a heading from A and adjust it. So we're going to look at part B here. And we're going to update the profit and loss, the prior year profit and loss. So that's adjusted P&L. And our adjusted P&L, again, every P&L, you have the P&L layout in your question. So we have to look at revenue, your cost of sales, and your operating expenses. So your revenue in this case, you're given the question as 46,220 million. Then we have to take away the revenue, which is 13.5 million for Swanson Company, multiplied by 8 over 12, which represents the 8 months. And you also have to add in the 1 million of intergroup revenue that was discussed in the question, just underneath after you provided the Swanson numbers. Next up is your cost of sales. So again, your cost of sales are 23.98 million that you provided in the question. You have to take away Swanson's cost of sales. The cost of sales of Swanson was 6.6 million. And then you have to take 8/12 of that. So we'll see here how we've taken the 23 million, the 6.6 million by 8 over 12. Just the way we're going to use the formulas, the cost of sales is a negative against the revenue. So what we'll do now is we'll go in and we'll update the formula for cost of sales, and we'll make that a negative. And in that way you'll be able to calculate your gross profit. And your gross profit is going to be useful for parts C and D, the way we have to recalculate the ratios. So your gross profit is those two added together. Again, put a label in, making sure that everybody can, not just the examiner can follow it, but that is actually going to be useful for you a little bit later on when you're doing your ratio calculation. Your operating expenses, another thing you can do, your operating expenses calculation is a similar calculation to the revenue. So what I'm going to do here is go up here and Control C and Control V into operating expenses and just change the numbers. So you're given 3.3 million in the profit and loss accounts at the very beginning. You're told the operating expenses for Swanson at the end of December is 2.51 million. Again, you have multiplied that by 8 over 12. And you also have the profit from the disposal, which is the 9.44 million. Again, similar to what we did for the cost of sales earlier, we'll make that all a negative number because they're all operating expenses. And then you have your profit from operations. Your profit from operations is your 18.6 million minus your 11 million. The last thing you really need is, as you look down through your ratios that are on the bottom of the question, you'll see that you have gross profit margin, operating margin, but also interest cover. So you need to calculate your finance costs. So your finance costs, again, similar to all the other formulas, are 960. Again, that's from the question. The finance costs for Swanson are 1.2 million. That 1.2 million is multiplied by 8 over 12. Again, look at where I'm putting the brackets. Just get yourself familiar where the brackets are important. Again, this is just me. Your finance costs are a negative, so it should be negative 160 because it's shown a negative cost. So now you've calculated your adjusted P&L and you have your 4 marks for part B. Now we've copied down the heading again and we'll start off with part C. So here's your heading. And what's part C? Well, part C is to calculate what's called the equivalent ratios. In the question, you're given ratios for 20x7 consolidated, and you're given 20x6 for Perkins Company individual. So it's clear that what you have to do here is to rework the same ratios, which is the gross profit, operating margin, and interest cover for the new company based on the calculations you've made in previous parts. Now, it's very useful to have all these side by side, so although you might think it takes a little bit of time, it just takes a couple of seconds to put in the ratios that we already have for 20x6 and 20x7. And therefore, when you recalculate the 20x7 ratios based on your P&L extracts, you'll be able to just have these side by side and very, very easily be able to pick out the main talking points for part D. Again, You should be thinking about when you're doing parts A, B, and C, how does all relate to part D? Because that's the ending point, and part D is the majority of the marks compared to any other section, so it's important. So we have the gross profit margin, the operating margin, and the interest cover. Again, use the ratios that you've already been given. There's no recalculation needed. It's just for presentation purposes, and also makes it much easier for you to do part D. You'll see here it gets a little bit squashed here. So again, use the formatting that you have available. Make plenty of room. Make it easier for the examiner. Bold the headings and put in all the numbers that you have there. So we have the 44.8 and the 16.8, the 3.5 times. Now what we need to do is to recalculate the ratios for 20x7. Now again, formulas are much easier here because again, if you find out you've made an error later on, let's say your revenue is different here, that will change all your numbers, everything will automatically update. So here we have your gross profit margin, which is your gross profit divided by your revenue. And again, use your drop down formatting that you have available to turn that into a percentage. What I've done here is copy down the gross profit margin. And then if you click on the formula, you'll see what cells are active. So for the operating margin, you want profit from operations, which is a 7.5 million, and you want revenue again. So you can drag your cells up and make sure you get the right ones. And then finally, your interest cover. And your interest cover is your profit from operations divided by your finance costs. So again, using your formulas, that's a minus 160, so just to get a positive number, you can't have a minus number of times in this case. So let's change that to 47.33. A couple of ways you can do, you can write times underneath it, or over on the left hand side beside the interest cover, you can write times in brackets, so the examiner knows that you know exactly how you're talking about this ratio and how you're representing it. So that's 2 marks for part C, and now we jump straight into the analysis of the question. So first of all, we're going to look at the gross profit margin, and in looking at the gross margin of Perkins, the underlying margin is higher than in 2000x6. When you take out Swanson's results, this continues to increase, despite Swanson having a gross margin of over 50%. It is possible that Swanson's gross margin was artificially inflated by obtaining cheap supplies from Perkins. Perkins Company makes a margin of 48.8, but only sold goods to Swanson at 30% margin. Then we move on to operating margin. The operating margin appears to have increased significantly on the prior year. You should note that this contains a profit on the disposal of Swanson, which has increased this significantly. If you remove the impact of Swanson, the disposal still shows that the margin improved on prior year, but it's much more in line. Swanson Company's operating margin is 32.6%, which is much higher than the margin earned by Perkins Company. So it does suggest that you sold a profitable business. But this is likely due to the fact that Swanson was able to use Perkins Company's facilities with no charge. It's likely that the rental income will also improve for Perkins in the future. In your interest cover, it shows good improvement in 20x7 compared to 20x6. There's been a significant increase in profits as well. But even with the profit on disposal stripped out, the interest cover is still very healthy. When you remove Swanson, this has improved even further, and it might be because of the disposal of Swanson has allowed Perkins to repay debt and reduce the interest expense incurred. It's really important at the end of a question like this to do a conclusion for the examiner. So your conclusion might include points that Swanson was a profitable company, and you might question why it was sold. However, the profits have been derived from favourable terms with Perkins, such as cheap supplies and free rental. It's worth noting that Perkins now has rental income in the year, and this should grow in future periods and likely to improve the income of Perkins. Again, when you're going through the points like I have done here, I've given you the discussion points around it, but I've also shown you how to write it for an examiner. Make clear points, try and avoid that your point in Excel goes all the way to the right, if nothing else for layout only. Make it as easy again for the examiner to give you those marks. So there's 9 marks in this section, it's really important. Make it easier, the examiner sees that you're making 2 or 3 good points under each heading and getting plenty of those marks. So all the best, and I really hope this helped.